Everyone believes banks collapse when economies collapse. That's the assumption. But what if the truth is the opposite? What if economic collapse isn't a failure of the system, but a feature of it? Because throughout modern history, banks have repeatedly emerged stronger after crashes, while nations sink deeper into debt. Currencies lose value, and ordinary people fall behind. This isn't luck. It's design. To understand how this works, we have to go back to where the system began. The origins. Money stops being real for most of history. Money was limited by something tangible: gold, silver, or physical assets. Governments couldn't endlessly spend because they couldn't endlessly create money. That changed in the 20th century. Central banks were given the power to create money out of nothing. Not as cash, but as loans. This is the key. Modern money is born as debt. When a government needs money, it doesn't print it directly. It borrows it from banks. With interest, from the very beginning, the system requires perpetual growth, perpetual borrowing, and perpetual repayment. If growth slows, the system starts to crack. And cracks create opportunity. The rise. Debt as a business model. As economies grew, so did debt. Governments borrowed to fund wars, infrastructure, and social programs. Corporations borrowed to expand. Consumers borrowed to survive rising costs. Banks didn't just hold money anymore. Every loan created new money. Every repayment destroyed it. Every missed payment transferred real assets upward. The more debt in the system, the more power banks gained. Crucially, banks were protected. Governments guaranteed them. Central banks backstopped them. Failure was no longer fatal. Risk became profitable. The breaking point. When the system overheats, debt-based systems always reach a limit. Eventually, people can't afford repayments. Governments run deficits. Inflation rises as more money chases the same goods. This is when economies begin to feel the pain. Savings lose value. Wages lag behind prices. Housing becomes unaffordable. Small businesses collapse. But this is also when banks activate their advantage. During crises, asset prices fall, stocks crash, real estate drops. Those with cash or access to central bank liquidity buy everything cheap. Banks don't panic. They reposition. The fallout. Who really pays when the system breaks? The story is always the same. Governments step in to save the economy. They inject liquidity. They cut interest rates. They bail out financial institutions. Losses are socialized. Gains remain private. Public debt explodes. Taxes rise. Austerity follows. Ordinary people pay through inflation, lost purchasing power, and reduced public services. Meanwhile, banks collect interest on newly issued debt created to fix a crisis caused by debt. The cycle tightens. The failed fixes, why nothing changes after every crash. Reforms are promised. New regulations. Stricter oversight. Never again, but the structure remains untouched. Money is still created as debt. Governments are still borrowers. Central banks still prioritize financial stability over public stability. Each fix treats symptoms, not causes. So the system resets larger than before. Modern parallels. The pattern repeats today. Global debt is higher than at any point in history. Trillions created in response to crises. Interest rates manipulated to sustain borrowing. Inflation quietly taxing everyone holding cash. Asset prices soar while productivity stagnated. The same pattern repeats. Crisis, intervention, debt expansion, wealth concentration. History doesn't repeat because people forget. It repeats because the incentives never change. 3 takeaways. First, modern banking profits most when volatility increases, not when stability lasts. Second, debt-based money systems transfer wealth upward during every crisis, legally and systematically. Third, economic collapses don't break the system, they reinforce it. The real question isn't whether another collapse is coming, it's who will be positioned to benefit when it does. Because the system isn't waiting to fail, it's waiting to reset. If this changed how you see money, debt, and power, subscribe for more deep financial documentaries, and ask yourself one question before the next crisis hits. Will you be paying for the collapse or profiting from it?